Ladies and gentlemen, good evening. I would like to thank the organizer and thank you for giving me a chance today to stand up here and discuss the economy of United Arab Emirates and then dig down into the economy of Abu Dhabi, which is the capital of UAE. Then finally, I would talk a little bit about the stock market, which I'm heading. Before we go into these details, I will share some video clip with you to show you UAE. What I'm trying to show here, almost 43 years ago, around 70s, if you wanted to travel from Abu Dhabi, for example, to Dubai, it will take you minimum 3 days. While today, we have to thank you for giving us the Ferraris, you could make it in 40 minutes in the wide highway and in the well-developed streets. Today, when we talk about UAE, we talk about a country that has a vision, there's Vision 2021. There's a Vision 2021 in UAE, which is relying mainly on united in responsibility, united in dignity, united in knowledge, and united in prosperity. This is the vision of UAE in general. Then, when we look at the achievement of UAE, we see that UAE, in terms of the global competitiveness index, it's ranked the 12th globally out of 148 countries. In terms of economic freedom of index, it is ranked 28th, again globally. When it comes to the ease of doing business, UAE is ranked 23rd out of 189 countries. And the GDP in UAE from 2008 till 2013 has grown by 12%. Then this is the economy, this is the vision of UAE. Then under the UAE, there are 7 states. Each state had its own vision. And I'm going to talk about the vision of Abu Dhabi Vision 2030. And I will discuss the GDP and the economic figures of the Vision 2030 of Abu Dhabi. At the time when the vision was put, it was almost at the year 2007. We had 2 main elements in that vision. One is to see a growth at the first phase of 11% on a yearly base. Then the vision went down and it became conservative, and they had a vision of growth 70% per year. And that 70% should continue all the way down till 2018. And from there, 2018 and above, the GDP should grow by 6%. The second vision is the diversification of economy. Today, as we talk today, most of the economy is relying on oil. And here's where the Abu Dhabi put a vision to diversify the economy from oil and rely on other services. Have we achieved these figures so far? This slide shows the following. That, for example, in 2008, we wanted to reach $104 billion. But in reality, we reached 191. And the year in 2010, 2012, we always outperformed the expectation. This is in terms of the GDP. In terms of the diversification, the economy away from oil, for example, in 2012, we were supposed to rely on oil by 47%. The non-oil, I'm talking about the non-oil. We're supposed to rely on the non-oil sector by 47%. But what we have achieved is 52%. 52% of the economy is not dependent on the oil. And when we talk about the diversification, which sectors we're talking about? Basically, we're talking about constructions, and this is in 2013. These are facts has been issued, that the non-oil sector is relying on constructions, manufacturing, real estate, finance, and other sectors. We will dig down into ADX, the stock market, Abu Dhabi Securities Exchange. Moving in alignment with the vision of Abu Dhabi, we have a vision to be the exchange of choice. And this chart shows us the strategy that we are relying on 3 main pillars. One of them is the security or strengthening the equity market. This is basically developing our existed stock and develop that into more financial instruments. The second pillar is the diversification of economy. We only have equity today. We are trying to go into bonds, into ETFs, and other financial instruments. Third is to have more of the participation of the institutional investors, and this is what we do when it comes to the road shows and when it comes to the opportunities that we show in ADX. And the market, since its establishment since year 2000 till today, has been gone through 3 different phases. And now we are starting the 4th one. The first phase, we timed it from 2000 to 2004. Here, where we established the market, we emphasized from day one into the quality, and we started the awareness programs, and we developed the market at that time, the 4 years. Then after that 4 years, we have thought and we realized that we need to promote the market. Here we started to do the promotion to show the opportunities of investing into the ADX, and we have done road shows in Europe, in US, and Far East. We came back to UAE, to Abu Dhabi, with new ideas and with new development processes like corporate governance and improving the disclosure and transparency. The third phase is the development phase. Here, that phase started right after the crisis. So we said we have moved the last 8 years in a very fast manner. So we take advantage of that phase to go and tune up. The biggest achievement, we became a full membership of World Federation Exchanges, and we became an emerging market of the MSCI, FTSE, and Russell Investment. That was a big jump to the operation of the stock market, and we're going to see how much cash and how much foreign investment were inflowed into the stock market. The fourth phase is the diversification process. And here we are aiming to see new IPOs. We already are planning for the 4 IPOs. One of them indeed going to start in 2014, and the remaining 3 will be in 2014. And we are very sure that we're going to see more and more of them. And there are other bonds, they're going to be available into the stock market, as well as we would allow the private companies to be listed into the stock market. The index, since its establishment till today, we see how much it went up. And then after the crisis, how much it went down. Then again, it's going up. In fact, 2012, we've been up by almost 14%. 2013, we've been up by 63%. It was the second best performing exchange globally. 2014 year to date, we are up by almost 11%. The other issue I would like to talk about here is from the bottom, I'm talking about after the crisis, till the end of quarter 3 of year 2004, we've seen the MSCI World has recovered by 141%, and the MSCI Emerging Market has recovered by 121%, while ADX has recovered by 139%. And the other issue, right before the crisis, till the end of the 3rd quarter, the MSCI World recovered the loss of 95%, MSCI Emerging Market by 62%, while ADX by 98.2%, which means we outperformed even the global market. Then here we see the market growth in terms of the market capitalization. We realize that in the last, almost since 2011, the market capitalization is increasing and going up. The average traded value of the market, we see it as well as going up and in a positive way. We have talked about the MSCI, and we have said the MSCI encouraged, and we've seen an inflow of foreign investment into the market. So as we talk today, there are 946,000 investors into the database of ADX, whereas 60% of them are from UAE and 40% are non-UAE. The non-UAE, as we talk today, as of yesterday, the shares that they own is 9.7 billion euro. And I categorized 25% of 9.7 euro is for the EU investors, for the investors coming from European, under the EU umbrella. And of course, in this year, they were buying and selling all the foreign. I'm still concentrating on the foreign. They are buying and selling shares. And we have noticed that the total is 3.3 billion as a net position. So when it comes to the investor from EU, they have bought shares and they have sold shares, but their net position is positive by 618 million euros, which means, in other words, that they are buying more than they are selling. Why this is happening? Why would we see more inflow of investment into the ADX and UAE in general? One, due to the stabilization of the economy. We have a very clear strategy with a very clear diversification methods. And We have a very clear agenda government for the UAE as a federal government, for Abu Dhabi as a capital. Then under Abu Dhabi, there are other sectors with a clear strategy, of course, tax-free. And the companies which are listed, basically, they are doing very well. And the cash that they distribute is very well. As a matter of fact, they are distributing 4.9% return on investment. And the expectation, because of the infrastructure spending of the government and because of the future forecast of the government, the expectation of those companies is very strong. Thank you very much for listening.